variance in the level of detail, and so we've suggested using some more question prompts to be a bit more direct, such as, does this directly hinder your 2030 target? Is it going to impact on biodiversity? It's not meant to be patronising. I know officers do think about these things, but I think just clarifying it in a bit more detail gives a bit more transparency and accountability when the council is having to make decisions that are often conflicting, competing priorities. They're tough decisions to make, balancing the short term and long term, etc. So I think just including that helps strengthen the processes at the council. And again, there's 2 lower level findings, but overall really strong opinion on the environment. And then finally, risk management. Again, a really strong opinion. It's substantial for the design and effectiveness of controls. Lots of good practice in place. Again, clear roles and responsibilities, strategies in place up to date. There's regular reporting and review, and obviously you've had training tonight, and there's regular training for officers as well. So really happy with that overall. We did raise one medium finding around, because when we looked at this, we did it looking at our BDO risk maturity assessment tool that we use as a kind of benchmarking best practice against all of the organisations we work with. And the finding was really around how risks are articulated. It's just something to strengthen potentially. So some of the risks we thought were a bit broad and didn't follow the kind of risk cause consequence structure, which in our view enables you to really drill down to what the actual risk is. I know people probably have it in their heads, they know what it is, but having it clearly written down enables you then to kind of go for what are the real mitigating controls that are really going to address this particular risk. So there's some examples in the report about how we think it could be better worded, but and similarly with the controls themselves, some of them weren't always fully smart, with timescales or key people that are supposed to be action owners. So the finding was around that. And then again, 2 lower level findings, which but again, overall really happy with what's going on at the council. So that's it.
Okay, thank you very much, Charlotte, for that very comprehensive insight into the report in the papers, which I'm sure our members have read in much detail and they'll have lots of questions on, I hope. So, in terms of internal audit progress, it's from your outline that it's on track and on plan from the 10 planned reviews, and you've reported back on the 3, obviously, with some very positive and strong opinions. So thank you for sharing that with us. So before I come back on any of the points, I'll open the floor up to members to pick up on any of the narrative that you've just taken us through. So members, do you have any questions or comments or require further clarification on anything on the internal audit report? Councillor Stockwood, you're about to push the button. Over to you.
I'd just like to start the ball rolling, Mr. Chairman. Thank you very much. Is this a new way of presenting things, slightly different? Because I can see we've got areas of concern, and you've identified findings, but sometimes it was pulled out that there would be specific tasks and when they would be done. Because really, you're identifying areas of concern, and then there's a action for the officers to implement. So, for example, if I just read that risk assessment one, I happen to have attended the training earlier, so I know there was the mention that there's going to be some improvements to our risk management table, but there's no list of points there as to what mitigation or what action you've asked for, and the fact that officers are accepting that point, whereas it's more of a descriptive text now. So did it perhaps used to be a bit simpler for me, that it was just an action, the officers agreed to it, and when it will be done?
Yeah, that is all still in our full reports, but this progress report takes a summary of each of the reports. I don't know if we can circulate the full report.
I was just going to add to that as well, in terms of So I was very briefly say we do a follow-up report as well, where the actual specific actions and recommendations that you mentioned that we have in the fuller report, they come back to this committee and we then give you a summary of progress against those. So this committee does see them, they're not lost. Obviously the officers do see the full actions and we will follow them up and report that to you as well. So it does come to this committee. It's just the formatting of how we do it here. Happy to take any feedback if you feel it's useful to see that element in this, and we can speak with officers to see if that's something you want to bring in, but that information does come to committee.
Okay, thank you, Gilbert. I think Peter wants to come in. Yeah.
I was going to say make the same point that you've just made, but the only other part I make is when you did see the recommendations, and normally if it was medium or high, I think we show the details. The low stuff, that's we don't. The purpose of this group is to focus on the bigger ticket things. So, I mean, thankfully, I don't think there's any high recommendations from what I recall. So most of the recommendations in any case are either medium or low.
Councillor Stockwood, does that answer your point? I think the point obviously around the audit of what the findings were and therefore the consequential actions and so on. So clearly they're there, but perhaps not in the shortened form of report. So the assurance I think which Peter has provided is that it is sort of analysed in depth and followed up. So do you want to come back on that, or are you happy with the response?
Well, it's just that, you know, in order for us to question the matter in front, it would be helpful if we knew that what specific tasks were going to be taken forward. So, I mean, perhaps in the sense that we're getting the strategic overview from this report, and that the report seems to suggest that everything is being addressed by the officers that's been raised, then I think I welcome the report and have no further questions, Mr. Chair.
Thank you, Councillor Stockwood. And I would tend to agree. I think in terms of some of the detailed, lower level, if I can call them that, areas of concern, if they're being dealt with, then there is an assumption that that is, after all, what our officers and the teams on a day-to-day basis are doing. So I think similarly with the risks, and we're going to discuss that later on. It's the red, if you like, the red areas or the more strategic, high impact ones that will come to this committee, and those which are highlighted in the reports. And I think with the substantial or very good positive sort of opinions on most of them, I think that provides some level of assurance, I think, on those.
Come back, Mr. Chairman. I've talked about the three items that we've talked about. Perhaps when we think about the wider picture and our strategic role, the narrative that follows regarding the sector update, is there going to be a continued presentation on that? Yes, well, but perhaps we'll hear from that later. Thank you.
Okay, I do have a couple of anything from any other members before I come in. I've got a couple of points. Charlotte, you referred to the project management framework, and you mentioned a date of 2012. So two questions, I suppose. One is, when are we likely to update that? Probably a question for our officers here. And secondly, I'm surprised this wasn't picked up sooner, if that's the case.
Yeah.
So the first point is, when will it be updated if it's 10 years out of date? And the second question is, why was this not picked up sooner?
This is in terms of our review, this is our first review in terms of project management. So it's not an area, obviously, I think we joined with the authority in 2020. And so it's not an area that we've looked at previously. So it's not something that we would have identified. Is the answer to the second one. The first one's probably then an officer question, I think, in terms of updating it.
I think in the action plan, you have to correct me, I think we said March 23, we're aiming to have it updated. The other point I make is that this council actually has been very successful in delivering big projects to budget and on time. And it's not that the framework is old, if you like, in terms of not being updated, but obviously there is a methodology, and in particular on our big projects. I'm sure you've all seen them reported through cabinet and scrutiny and various other types of reporting. So that's how we do tend to report them, particularly through cabinet.
Thank you, Peter, for obviously the assurance on our approach to the bigger projects. But I suppose the point is, yes, we have delivered those successfully, but if our internal auditors have picked it up, then it's good to see it's going to be actioned in terms of updating that next year. So thank you for that. One other question from myself, and that is a reference for BDO, this one I think specifically. There is a reference to the added value benchmarking, which was coming to this committee in September. I don't see any references to that. So if you could clarify where we are with that.
So I had a conversation with officers earlier on this one. Unfortunately, that's been delayed slightly. So it's what this paper is across our local government portfolio and a number of networks that we engage with. We've issued a survey and then held in-depth interviews about how they perceive risk management, what risks have increased, what challenges are there with risk management in local government specifically. In September, I think it was the 23rd of September, actually, Charlotte and I did a session in person in our Birmingham office to talk about some of the initial findings with a cohort of heads of internal audit across the Midlands. We're now having to analyse that, and unfortunately to actually turn it into our thought leadership piece also has to go for our marketing team. So it's slightly delayed. We're not too far off doing that, and I anticipate possibly not for the next committee in terms of the one at the end of November, but the one after this committee will see that and the outcome of that.
Okay, thank you, Gurpreet, for that. So we'll expect that in the February, I think it is, February meeting, not the one in a few weeks. Yeah, okay, thank you. One final point from me, because I know you have to go, and it's not necessarily to do with the report, but it does go back to an item we discussed, was it earlier this year or last year? But that was the Redmond review in terms of the independent members of this sort of a group. I was just wondering, and perhaps for members, it would be insightful to understand whether there's been any further work or updates, in terms of progress, what other authorities are doing, and whether we as a group may wish to come back to this particular item.
So from the latest understanding, unless something's changed in the last kind of couple of weeks, and we actually talked about this in that September meeting with other heads of audit. CITFA attended that meeting as well and provided us an update on what's happening then. I think it was at the end of May or June, the government announced to say that it is going to be a requirement for local authority audit committees to have an independent member on their audit committees. How that's actually going to be manifested and look like and what's required and by when, the details are still to be published to my knowledge, and like I said, unless it's happened in the last kind of 10 days or so. What we've seen other authorities do, and we had actually an independent member come to that meeting we did in our offices to give their experience, and then we had a conversation across about 10 or so different authorities and what they're doing. Some already have an independent member. Those that don't are starting to look to seek to identify one or to develop a job specification and to go out to see how that might work. Obviously, others are considering, should that individual be an independent member who sits on the group, a chair? How does that work? Should you have more than one, which we have seen in other authorities? So others are all exploring that, and we just facilitated a conversation for them to have that at that meeting. And there are some who are in that discussion who said they're waiting for more detail, and then they'll look into it. So I can check to see if anything else has new come out and share it, but to my knowledge, that's the latest position. Some are proactively looking at that, and I'll say that's a consideration for this committee as to what speed and pace you want to do, if you want to be proactive and start to look at it, or wait for further guidance and then take action.
Okay, that's helpful. So just to clarify, it sounds like, is it going to become mandatory? Is that what you're indicating?
That's my understanding, is that this is going to be a requirement of local authority audit committees or governance scrutiny groups to have an independent member. I know previously this group discussed it, voted on it. I know that wasn't the position then, but as I understand it from all conversations since, yes, this is going to be something that you will be required to do at some stage. At what stage, I'm not sure.
Yeah, and Gurpreet's correct. That's my understanding. It's the same as Gurpreet. It's obviously there's more important things going on, I guess, in government at the moment than worrying about independent members. But I think one of the challenges is firstly, obviously, trying to attract independent members. and also even once you've attracted them, retaining them. So I'm aware that certainly there's one authority not too far from here that has had an independent member, which not after not too many meetings bit the dust. So it's going to be a challenge. You know, 'cause you've got to think about, you know, how do you remunerate them and just to make it attractive, I guess.
Okay, I mean, it sounds like we're going to have this item back on the agenda at a future meeting, and perhaps as an authority, it would be beneficial to be ahead of the curve, if I can put it that way, in terms of Peter, some of the issues that you've highlighted there in terms of the recruitment, retention, and so on. So, not trying to jump to the item now, but I think certainly, perhaps, you know, your thoughts in terms of as officers, what that might entail, how we might go about that, and just a bit of a heads up, really, I think, if that's where we're headed. Good. Okay. Any further comments in terms of the internal audit report from members? If not, our report has recommended that the governance scrutiny group notes the progress report, which we have duly done, and the comments from our colleagues at BDO, prepared by the council's internal auditors. So if there are no further comments, Tracy, I think we'll minute and note that as recommended. Okay, Gurpreet and Charlotte, I believe you need to leave us at this juncture. So thank you very much for your contribution today, and we will see you at a future meeting. Thank you very much. Okay, so we can, in which case, move on to item number 5, which is the Streetwise annual report. And we do have with us Paul Emerson, who is currently, I believe, the company secretary of the company. Paul, you will take us through some of the highlights of the report, but perhaps I can ask Peter, just before we do that, just to set some general context around Streetwise, as there have been some, as we're all aware, some strategic changes in where that company sits in the governance arrangement. So, Pete, do you want to maybe set the scene for us?
Thank you, Chairman. Yes, so obviously this is the annual report for the last financial year. So just to be clear that we are focusing on 2021-22. It's not. We're not focusing on the current situation. Those of you who perhaps want to see an update on where things are at, if you refer to the cabinet papers, riveting read, to see what the current position is with regards to Streetwise, and which has now come back to the council. I suppose going forward, in terms of if you're wondering about how that's going to be reported, and obviously because it's come back in-house, it will form part of the council's normal financial and performance monitoring arrangements. So it'll go through, obviously there'll be reports to both cabinet and corporate overview group on how it's doing, and the anticipated success of it coming back in-house. Normally it would be the managing director, because obviously it is company business, and obviously I haven't been privy. I'm part of the company for the last financial year. And if you recall, last year Nigel Carter did the presentation. Unfortunately, Nigel's no longer with Streetwise, so I'm afraid you got to make do with myself and Paul as the to present the report. But Paul will do a very good job. I'm pretty sure of that. And as Devinder's just said, that Paul is the company secretary, and obviously that's more. Certainly had more detailed knowledge and has been at the various board meetings in the 12 months that we're talking about, where issues may have arisen and been discussed. Obviously, it's still, whilst it has come in-house, it is company business, so we always, tend to, be careful what we do say, but it's I suppose not, in some ways, not quite as critical as it was in that sense, because obviously it has come back in-house in any case. So what you'll see in the papers are 2 sets of financial reports, basically looking at, if you like, Streetwise in terms of the Rushcliffe side of Streetwise, and then there's the, if you like, the trading arm of Streetwise. That's what the 2 financial reports are. So you've got appendices A and B, and Paul's going to really talk largely surrounding some of the key points regarding those particular financial aspects. And then at page 61, you've got Appendix C, which covers a range of headings for performance from governance to financial standing. So I'm not going to say anything else at this point, but I'm going to hand over to Paul really just to talk through some of the key aspects for the last financial year.
Okie dokie. Thank you very much, Peter. Nice to meet you all. Yes, so I thought to start by saying, there's two companies, as you know. There's the Streetwise Environmental Limited. That's got the prime contract in there. That's now gone back to council. So there's one set of accounts for that, which is Appendix A, I think. And then there's the trading company, which is all the other business that Streetwise has built up over the years. That's Appendix B. So there's two sets of accounts. So I thought I'd just talk you through some, I don't know how much detail people have gone into these accounts. I just thought I'd talk you through some key numbers in the balance sheets, and then any questions can arise from that. And also perhaps the key performance indicators, which are on page 64. I'll refer to those as well. So in terms of so this is page 40 in the public pack. Page 40, we've got the balance sheet there, which you can see that there's been an improved position from the previous financial year to the current financial year. It's gone from, looking at the members fund on the bottom line, it's gone from 309,000 deficit to 46,000 deficits. That's an improvement of about £260,000 in that financial year. And I'm going to quickly refer to page 54, which shows the same balance sheet. I don't know if you can switch to it that quickly. I'm just trying to give you a feel for how the business has done in this particular year. The 2021 reserves were £115,000, and the reserves as at 31st of March 22 were £133,000. So there's an improvement in the financial position there. So there's been an improvement in the financial position in both sets of accounts. Right, going back to page 40. So trying to set the scene there. Going back to page 40. The tangible fixed assets there, 338,000. That represents all the plant, machinery, vehicles that Streetwise has got in operation that serves all the customers. So that's sitting there. That's obviously now in the process of going back to council. In fact, has gone back to council now. And then looking at the current assets, you can see that there's inventories there of 48,000. That's things like plant, shrubs, and consumables, etc. 48,000 this year, 49,000 last year, so that's consistent. The amounts for due less than 1 year, that's mainly trade debtors and intercompany balances. And the £955,000 there, that's the pension deficit, which is quite a big number. The pension amount of the defined benefit obligation at the point that all the employees when they were originally transferred into Streetwise 8 years ago. So that was the value of the pension liability at that point in time. So having just pointed that out, if you look at note 11, the pension liability, you can see that the pension liability has now gone up to 1.5 million. So you can see it's moved from 955 to 1.5 million in the 8 years. So that's the pension liability. Going back to the cash at bank, you can see that the cash reserves are £467,000. Very strong financial position that is, compared to the previous year, 498,000. And then we've got the creditors; they're consistent, and the loans. So there's some RBC loans, which there was I think there was 3 loans from RBC to Streetwise to help fund vehicle acquisitions, etc., over the years. That the majority of that 177,000 is that. So that explains that particular balance sheet there. I hope I'm overcomplicated it there for anybody. And then turn to page 54. That's a very simplified. That's a much more sort of like simpler kind of business, if you like, because we've got intangible assets, 62,000. That's the goodwill on acquisition of a business a few years ago. The tangible assets are vehicles and equipment, and we've got stocks and debtors in a very similar way I've just explained on that balance sheet there. And that's it really in terms of that. There's a lot of detail behind the notes, and you know, perhaps if anybody's had a look at those details, that if they've got any questions, I can try and answer them.
Paul, thank you for the insight into the numbers. Unless any comments are coming from members at the moment, perhaps a walk through the narrative in terms of some of the key areas, the governance arrangements, external accreditations, environmental accreditations, and so on, which I think you said were Appendix C. We can come back to some of the numbers, but does anybody have any points they want to raise at the moment?
Quick question.
Penny.
Hi. So I believe that some councils in the area are trying to replace their bin lorries because they, you know, run out of steam, and obviously they've got a bit of a problem working out what to do with the Environment Act. Are you in that position? So your lorries are all new or serviceable at the moment?
Sorry, no, it's not my area in terms of sourcing acquisitions of potential vehicles, etc. That would have been part of the operational strategy of the directors that were running Streetwise at the time.
So is there any new equipment?
Yes, there is. There's a few. I think obviously there's always an ongoing acquisition plan because obviously vehicles come to the end of their life and they have to be replaced. So yes, there has been some vehicle acquisitions and plant acquisitions during the course of that year. In fact, the number, I can give you the number on page 44. You can see that the acquisitions, £153,000. Yes. There's sorry.
Just to interject, obviously you're on about bin lorries. Streetwise is about grounds maintenance and street cleansing, so it's nothing to do with the bin lorries. But I would point out also, Councillor Gowland, that if you look at paragraph 3.2 at Appendix C, does mention some of the initiatives as Streetwise itself has looked towards, using more electric equipment, etc., to the sort of thing you were alluding to.
Yeah. Okay.
Does that clarify? I think it sounds like it does, Councillor Cowland. Okay. Any further questions on the numbers at the moment? If not, perhaps Paul, if you take us through some of the key areas in Appendix C, then we can open the floor up again.
Yes, of course. So on page 64, there's a table there of the key financial performance indicators that we felt that were important to report. And the first one is the turnover. The turnover has dropped from 3.5 million to 3.1 million during the course of the year. That's due mainly to the loss of, as an expected loss of a contract. In fact, it came to an end. It came to a natural end. The contract did with a major maintenance company. So that was about £750,000 of income that was lost annually. And so the net effect actually is that if you disregard, in fact, I've got a note here somewhere. If you disregard the loss of the contract, the turnover actually went up from 2.3 million to 2.5 million. If you disregard the loss of that contract that was lost, I think, about September 21. So that's the turnover. Operating profit stroke loss. In the course of the last financial year, there was £82,000. This is just purely the operating profit. And the previous year, 2020, well, that was massively impacted by COVID. I think Nigel reported £60,000-70,000 of additional costs in respect to the COVID pandemic in 2021, which is why we've got an operating loss of £14,000 in that particular year. And pension costs, this is both the accrued element and the actual element. So you've got pension costs of £146,000 this year. This is what the pension liability is going up by each year. So that's a mixture of actual physical paid and an accrued element. fund the eventual retirement of people. Then the tax, that's mainly deferred tax, which is a complicated thing to explain, but that's mainly in respect of the pension cost. Then net profit after tax is a loss of £44,000 for the current financial year, compared to a loss of £109,000 last year. But this is after the pension costs and the accrued element has been put through the financial statement. The gross profit percentage is 32% this year, showing a much better performance there in terms of the previous year of 27.5%. Operating profit as a percentage of sales is positive this year, 2.6%. This is looking at the operating profit. So that's gone up from -0.4 last year to 2.6% this year. And then if you take into account pension costs, the net profit as a percentage of sales, they're both negative, 1.4% this year and 3.1% last year. And we just threw in there what the monthly turnover break-even point was for each of those 2 years. So you can see that in the current year, the year end of 2022, it's become more efficient because the break-even point had fallen from 280,000 to 262,000. And then the key liquidity ratio just show you the strength, the financial strength of the company. So you can see it's gone up from 1.8 to 1.9. So that's how quickly the company is able to turn assets into cash. So it's very good. If it's about 1.5 to 2 is always very good. And asset test is the immediate availability of liquid funds. So if you're above 1, you're very, very good. So 1.5 is an excellent factor. And then obviously you can see that cash at bank is 466,000, 498,000 last year.
Thank you very much, Paul. Do we have any questions on the key KPIs which Paul has taken us through? Any other comments? We as a group have been asked to receive this report and make any comments or raise any concerns to Cabinet. This report will be going to Cabinet, I believe, next month, is it, Peter? No, later this month. Oh, is it next month? Okay. Yes, next month. So, any questions from members? Councillor Stockwood.
So, I mean, there's a series of strategic questions about what happens next with Streetwise, etc. But with regards to the specific numbers that you presented in your key indicators, were you set any targets for what it was you were attempting to achieve? Which targets did you achieve? Which targets did you struggle to achieve? And which were what was the cause of the, of the problems in achieving what you were trying to do with the company?
Yes, there was budget set. Nigel Carter was responsible for setting all the budget. He was the managing director who resigned on the 31st of May this year. He obviously set the budgets in light of past performance and tried to set them a little bit higher, the bar a little bit higher to achieve growth for the business. And I think in the majority of areas, other than I think it was framework opportunities was the area where they struggled the most. But obviously I wasn't involved in the operational aspects of the company, so not involved into the day-to-day running. I won't be able to comment any further than that, really.
In the sense then that I think what you're telling the committee is you were involved in producing this set of reports. Are you confident that this is a thorough and complete set of financial reports? Have there been any particular problems in preparing them, and how have you overcome those problems?
No, it's been absolutely no issues with the numbers at all. I put the accounts together from the information, and I'm confident that they are a true reflection of the financial position of the business.
Well, just to add as well, the accounts are consolidated with the council statement of accounts, so there's a sort of a degree of audit there as well in terms of the validity of the accounts. Just on sorry, Councillor, just on, I suppose it's worth points. A couple of points for me really on the finances is that one thing you will notice is profit's very margin. It's not a huge profit. It's a very tight market, and again, there's been a lot of risk, and obviously we've had COVID the last 2 years, which has made trading conditions even, I think, more challenging. So, you know, that said, even throughout the time that the company's been going, Paul can correct me, the profits have been it is a very difficult market to make a lot of money in, and which is another reason really the company's come back in-house.
Does that clarify your question, Councillor Strong?
Yeah, those are my questions about the specific numbers. I think there'd be another debate that I'd like to continue about strategically where we're at and where we're going, or where we've been. But I think that's just my questions about the specific numbers.
Yes, and
come back.
Yes, and on that point, I think we are asked to look at the accounts as a point in time, the 21-22 accounts, which is what we're doing. But I think noted that you know, I mean, this is going to cabinet. It has come in house. There will be, I'm sure, further opportunity for discussion and analysis in terms of how, you know, the governance and the management and the future performance is going to be sort of looked at. But Peter, you might want to comment here.
And there was the report which I think you would have seen, is the report where we decided where it was decided by cabinet for it to come in house. So where some of those, if you like, those strategic debates, if you like, really are in that report. And that's I probably, if you want some extra bedtime reading, perhaps you could refer to that report.
Thanks very much, Mr. Chair. I understand, you know, that decision has been made, and we're looking at the accounts of an organisation that is closed, as far as I understand, in September. So with regards to those figures, I'm very grateful you presented them, and I understand that we are being assured that they're, you know, a reasonable set of figures. It becomes then the discussion about you know, what do we feed back to cabinet, the strategic messages that we pick out from this report, which is not just the figures but also some narrative about its things. I was there at the beginning of Streetwise when it was supposed to be a social enterprise, and I talked about this at the last meeting when we last considered it with the previous officer from the organisation. Is there a strategic look at what has been learnt from this major project? Because we've just been told we have a project framework that's perhaps out of date, and what we delivered major projects. Well, we delivered this project. It was created Streetwise, and now it's coming back. What have we learned from that process, and what lessons? How are we recording that knowledge and moving forward when we consider future projects? And is there an actual assessment of how much it all cost in terms of that process? Because I was there at the beginning when there were figures of £300,000 a year profit being generated and all sorts, about how we were going to be a national company and quite aspirational at the beginning. And then, so that does come into where we're on now, is this a set of accounts that ends a company, or the last set of accounts I think will ever be presented because the company is over. So what is the future of reporting that's going to go forward? Will it now simply be scrutiny reports to a scrutiny committee as the way forward? And what will those scrutiny reports be about? Because there's a number of elements that have been raised there. The accounts say that effectively, financially, although profits were tight, things were actually improving within the company, even with the loss of Metropolitan. And so there was a pathway of future financial performance. And does we have any targets regarding that? This organisation previously had a community or social role. What are we trying to achieve now with this, moving forward with Streetwise as a service? Do we have any targets, or you know, what are we aiming to achieve in terms of social impact of this organisation? And then you've also raised the point of it now becomes part of our carbon management plan, which you're talking about the environmental impact. So I've got a set of reports of a company, of a decision that's already been made that says this company is going to end, and the major staff, the leading roles have left an organisation. Moving forward, our feedback to cabinet is there should be a future reporting organised, well, first of all, you should learn some lessons from what happened and record them for the future as to how they'll improve your project assessments going forward, and think about how much it all costs to going in and out of the process. Looking to the future, there should be a framework of reporting, and that future framework should have some targets which are both financial in terms of building the trading growth, which is, I think, is an opportunity risk in our later report, and environmental and social, and that all of that will then be reported back to scrutiny in an appropriate way. And I'd like to see some structure around actually somebody spelling out what is the action plan for future reporting now that, because I can see a set of accounts, the organisation is finished. What happens next? What's next year's reporting structure? And so I think our message back to Cabinet is that we understand that these are a good set of reports, and we have confidence that they're solid. But looking to the future, we would like to see some scrutiny and some targets around what Streetwise can do for local residents in financial terms, social terms, and environmental terms. And the clear report in that report to Cabinet that's going forward is we should put forward those points.
Thank you, Councillor Stockwood. Just before I come back, Peter, do you want to make any comments on some of the points raised?
Well, I think we'll articulate what you've just, assuming the group agrees with you, of course, and we'll take back we'll take back that feedback to Cabinet. But rest assured, I mean, we do have a strong performance and financial reporting framework, and obviously Streetwise will form part of that.
Councillor Gowland.
Just like to say, totally agree with you. I just wonder, linked to that, and it may be this is not an appropriate question for this meeting. I wonder what happened to that Metropolitan contract, who got it, and I'd also wonder the link between the work done by VIA. I just wonder if it went to VIA and Streetwise. Obviously, they're not quite the same, but VIA does overlap quite a lot, literally on the same roads in some places in my area, and whether there's a sort of duplication that's unneeded at this point, whether that's been considered by the council.
Okay, thank you for the contribution from all members there. I think there's some interesting points raised, and Councillor Stockwood, thank you for asking the question, and also I think answering it as well in terms of some of the recommended comments for Cabinet. But I think clearly there's two aspects here. One is the financial performance of the company, which we're asked to note and go back on any comments. And clearly that there was a trend which I think was, despite the loss of this big contract, the underlying trend was turnover was going up, liabilities had gone down, pension liabilities and net liabilities and so on. So there were some positives, but I think clearly there were also some no doubt counterbalancing issues which may have form part of this strategic decision for it coming in-house. So that's one aspect. I think we've noted much of the numbers and the sort of key highlights, Paul. Thank you for that. And I think going back to then Councillor Stockwood's very comprehensive sort of summary there are some very, I think, relevant points there, which no doubt Cabinet will be discussing around how the future governance, management and monitoring of Streetwise moving forwards will take place. So I think those second set of comments are primarily around, around those sort of areas, and Pete, how when it does go to Cabinet, how that may be then coming back to. You mentioned scrutiny there, Councillor Stockwood, but I don't believe it will come back to this particular group. It will obviously be Cabinet, and it will be the corporate overview group, possibly, I don't know, but I don't think it'll be coming back to ourselves. So, Pete, I don't know if you want to add anything, but I think we've got quite comprehensive comments we can note down in the minutes in terms of our feelings about this moving forward.
I've nothing further to add than what I've already said. Thank you, Chair.
Okay, if there are No further comments. Councillor Shaw, you're looking at me there, like you were going to come in. Okay. In which case, the governance scrutiny group were asked to receive the annual report, which you have duly done. Paul, thank you for the summary and the highlights. We've made quite a number of, I think, observations and comments, which will go back to Cabinet, which I'm sure Tracy has always captured very, very well. Okay, thank you all for that. Paul, you are welcome to stay for the rest of the meeting, but if you do need to go, then I'm sure you'll make the appropriate decision. But thank you for your contribution and engagement today.
But Paul, sorry, you can watch this at home as well.
Yeah, we'll still be live for you to watch. Okay, thank you very much for that. Okay, in which case we'll move on to agenda item number 6, which is very topical, as most of us were in the risk management training session with Zurich earlier this evening. But Charlotte, and I see you're plugging your laptop in and getting yourself set up. But if you want to take us through some of the key highlights of this particular report before we have a debate.
Thank you very much, Chairman. I'm sorry for the disruption. I just thought I could see you all better now we were less of us. So this is the Risk Management Progress Report, your half-year update. The last report was the 3rd of February, and I'd like to direct your attention to page 65 of the agenda pack, which is the start of the report. I am going to make a big leap of faith and hope that you have read it, which means that I will just go through things very briefly before answering any questions that you might have. So this is your regular report on risk management, highlighting changes to the Council's risk register, as well as risk management activity that the authority has participated in since the last report. So since you last saw me in this guise, the Council's risk management group has met twice, in June and in August. A risk management audit, which you've already heard about this evening, has been carried out by the Council's internal auditor. And general risk management training has been provided to lead specialists and above. So these are our managers of different teams across the organisation, with service managers such as myself and Sarah participating in a more specific session about opportunity risk. And then, of course, you yourselves this evening has received training as well. So in terms of an update, there's been quite a lot of risk activity. Moving now onto the risk register as it stands at the moment, it contains 41 corporate risks and 28 operational risks. So I will remind you that that number, it will fluctuate through the course of the year as active risk management is undertaken. Appendix A in your report pack contains the risk register. And you will see by looking at that document that 7 new risks have been identified and 15 risks have been removed as a result of recent reviews since our last update. Many of those that have been removed were related to the COVID-19 pandemic and our recovery from that. So additionally, there are 3 increases and 4 reductions to risk ratings. And these are detailed in paragraph 4.6 of your report on pages 66 and 67. Of the 7 new risks, you have exciting things such as the delivery of the new core strategy, failure to deliver the LDO for Ratcliffe-on-Soar power station site, increase in interest rates if the council needs to borrow funds connected to the cost of living crisis, the Homes for Ukraine scheme, failure to deliver the carbon management plan. As well as these, 2 new opportunity risks have been identified and included in your risk register. And these relate to interest rates and the increase in investment interest on account or on money that we have sitting in accounts. And as Paul has just mentioned, the insourcing of Streetwise. The risk register is presented from page 71, containing information about each of the risks identified, as well as explanations where changes have been made since the last review. I'm also pleased to draw Councillors' attention to Appendix B on page 78, which contains information on the 4 opportunity risks that have been identified. And I'm pleased to say that we are working on additions to this area for next year's risk register. Appendix C, starting on page 83, provides focus on the current high level or red risks, so that the group can look at controls and mitigating actions if you feel that is necessary. As always, I am happy to answer questions you have, Mr. Chairman.
Charlotte, thank you very much for the insight into the report, and you'll be pleased to know not only did I read the report, but I made lots of notes as well. So I'm just making sure they're aligned to your commentary just there, but thank you for that. So as I said earlier, it's very topical with the risk management training we had earlier this evening. So on that basis, I'm sure members might have lots of questions in terms of the training we've just had. As a group, we're obviously asked to receive the annual, to receive the risk register and make any comments, particularly on the red risks, which, as you said, Charlotte, are on Appendix C. So do we have any comments or any amendments in terms of mitigating actions on those in particular from members? Councillor Stockwood.
Mr. Chairman, on page 86 of my pack, it says, so we're looking at the opportunity of insourcing Streetwise to provide other chargeable services to both public and private sector in line with the council's charging policy. So the financial impact says, whilst the main service would not be affected, the opportunity to charge for further services spelled incorrectly could use a reduction in current income. So I just like to point out, Charlotte spelled services wrong. I just thought that was my contribution to the meeting, really. Are you sure that it's an opportunity to reduce current income, or is it an opportunity to grow income? I feel really that it's an opportunity to charge others is in effect an opportunity to we'd be setting our charges above our costs, so it would be an opportunity to grow the income rather than reduce the income. I feel like an opportunity to reduce income is not something we should pursue. A bit critical there on your business plan, but I think the word's the wrong way around there. And I just wanted to pick up on that point as my first one.
Yes.
Oh, sorry.
You've clearly spotted the deliberate mistake, so well done.
Actually, just on that point about income, and you mentioned earlier, Peter, the margins are incredibly small in terms of that particular service provision. Maybe going back to the earlier discussion, I don't want to reopen the agenda item, but one of the other sort of areas of discussion, I suppose, is in fact how we make sure that we continue to deliver those services, but not at a loss, which I'm sure is part of the business plan. But it just reminded me, Councillor Stockwood's point there about the fact the margins are incredibly small, aren't they? So I think that's possibly a further comment that might need to be included there. But Councillor Stockwood, I think you want to come back in.
Well, with regards to the red points, that was my main point because I just wanted to be able to do those things. With regards to training that we've just had, one thing that I hadn't picked up before in previous years' training is about thinking about our risks. The risks that we should consider should be strategic risks, not operational risks. And as such, it's the strategic risks of new lines of business, and that's why it got me thinking about it, because Streetwise has an opportunity to engage in increased trading. It seems to be particularly profitable, around 50k. So that's a new project for the council. Looking at the medium-term financial strategy, etc., and some reports that went to cabinet, there are other projects to the council regarding delivering, bringing homes back into use. There was a report about sites, shall we say, or sites that where we would be pursuing at financial cost. high risk strategy of bringing sites back into use. I don't want to go into the details of the confidential report, but there is a strategy there where we are pursuing. There's quite a significant financial element of uncertainty around that project, as far as I'm aware. There's also, within the medium-term financial strategy, it does say publicly that you're looking to produce a traveller site. So in terms of what we've said publicly, the risks, what are the new risks brought into the organisation by new lines of business? Because that would be a strategic thing rather than a operational matter. And I was just thinking what I've heard from training and trying to relate it forward. A point that I've not considered before is about new projects and how do they come forward? How did you select and manage? You select and manage the list of risks. How did we? What risks do we see around these new projects that are coming forward, and when will they appear? I think.
Charlotte, do you want to come?
Thank you very much. So each year we sit down as service manager and we look at the forward plan for next year. It's something that we're doing at the moment. We do it this side of Christmas. We talk to executive managers and the chief executive. We all sit down together and have a look at what the projects are. The task that we do after that as service managers is look at what do we need to put any of those things in the risk register and what things drop out. So as well as doing our bi-monthly performance clinics, which also look at risks and everything gets checked every 2 months, we also sit down at that one point in the year and say, what do we need to include now? So those projects that you're talking about, things that are coming online now over the next few months, will be part of that discussion and will appear in the risk register next time round.
Well, just thank you very much for that explanation. Sometimes I struggle to navigate the wealth of information on the website. So, is it possible for councillors to see the 3-month forward plan, the 12-month forward plan, and the 5-year corporate plan? Can you direct me to the links after the meeting for those 3 documents?
I can certainly send them around and point you in the right direction, yes.
Thank you very much.
Hopefully with the new website, things should be easier.
Yes, which is currently being trialled. So. Any further points from members on the particularly the red risks and our officers' sort of proposed actions?
Just a point. Sorry, Councillor Stockwood. Do you want to take Councillor Stockwood's?
Thank you. I don't know whether I missed it, but this is quite a delicate area, but certain individuals are being paid for by the government to be housed in this area. Is that coming to an end? Have we any indication? I mean, that is a risk, isn't it? That they will then become a liability in this area. Have I missed it? There was quite a lot to
it. Is definitely in there, yes.
Right. Thank you very much.
Peter, you wanted to raise a point.
I can't think I was going to say that. No, what I was going to say was that obviously the whole risk environment is very fluid, so things do change. So traveller sites is a good example. I think the challenge with that is at the moment we probably not far. Whilst we know that there may be something in the offering, we aren't really far enough advanced, which is probably why I don't see any reference to it. Obviously, as things move, then there'll be updates, and Charlotte alluded to it. There'll be updates to the register. We have regular, I don't know how often now, 6 weeks or quarterly meetings as management team where we go through risks and make sure. And that's why when you see all the additions and changes, that they often come from the meetings we have as management team, and then they filter through to this report. But it is very fluid, from just look at the financial environment at the moment, how quickly things have changed with interest rates and everything else, and that's how quick, by the time we could be writing these reports. I mean, this report's a few weeks old anyway from when it was being presented, when it was intended to be presented, but clearly things can change. So But the importance of this group is obviously, and Councillor Stott was right, and that's what you should be doing. It's certainly looking at the risks that we've highlighted in here. Is there anything there you think, actually, no, I'm not sure that is a medium risk or a low risk, is it a high risk, or so there's a sort of judgment call on some of these. It's not an exact science. And obviously the other point is, what are the risks that we've not picked up, that perhaps need adding to the register, and that's certainly Councillor Stott, we've made some good points about thinking about particularly where there's change, and that's what we have to be, we have to be mindful, particularly change in the external environment as well as the internal environment.
Councillor Gallagher,
Sorry,
did you want to make a comment?
So I think I was going to come back to some of the new risks that have been put on, but I think the risk central government policy changes, this is not in any sense meant to be a political point. This is that comment, that risk seems to be too vague to be helpful, because the comments that have been put below are lobby governments. But if you're in a, just say you were in a situation where you had a government that were acting completely spuriously, lobbying them would make, and maybe that when this was written that was not a possible scenario, but I think we understand now it is, that would not be meaningful mitigation. Presuming the mitigation should be, what are the reserves we have to deal with some catastrophic change. And it's probably only that one central government policy change that can be so completely random. I don't think, forces of nature, we kind of have some idea of what the realms and ranges of those are. But this one, I almost wonder if it's even worth listing it, because there's not much you can say except we're going to lobby government, which under the circumstances probably wouldn't be helpful. So is it meaningful, that one, really?
Charlotte, did you want to?
I think I accept the challenge. I think it comes under what Matthew said earlier on, bad things will happen. We need to go back and have a look at the wording on that one.
So just to add, there will be, that is a generic, if you like, more strategic, overarching. Yeah. It's like, the parent-child, I know we've talked about parent-child risk, but it's almost like the parent, and then there's lots of children, running all over the place at the moment, if you like. But there's lots of those sorts of, but within the risks here, there's a whole plethora of different policies that are covered in different areas of the register.
Okay, thank you for all of those comments. And just going back to the training the group had earlier on, what I'm pleased to see actually is there is alignment, I think, in some of the models we were talking about earlier and the processes we're following in terms of our risk management process. And just to remind the group that our internal auditors did give us a substantial opinion on both design and effectiveness of our risk management processes. But we do have a very critical role in scrutinising and ensuring that we are comfortable in terms of some of the mitigating actions, particularly for the red ones. Shah, I've got a quick question on FCSO5, Revaluation Major Rate Payer. And, I know this is a known one and still in the air really in terms of decisions, but do we have any progress or action plan in terms of moving forwards with the Rushcliffe, obviously Ratcliffe and Seoul Power Station accounts for as a business rate payer a huge amount of income for us. So I'm sure Peter's and Sarah factored this into our medium-term financial strategy, but just by way of an update to assure us that, again, this isn't just bullets on this, but actually there is a lot of ongoing actions.
Well, it's sort of rhetorical in a way, and I think you answered the question, because obviously we are factoring in and have been factoring in the reductions in business rates. The power station a few years ago used to be a £6 million rate receipt, and there's been various appeals from the power station which have been successful, which have led to reduction. So the authorities, we've had to manage, if you like, that reduction in business rates through the MTFS, and that's what we still are doing. And obviously it will, one thing we do know is it will be closing. Well, it is 24-25 in legislation at the moment. Whether that changes or not, given where things are at with the market and power and everything, that who knows if that will change. But obviously when we're budgeting on the fact that obviously that power station is closing, and so that's factored into our figures for the medium-term financial strategy. And just to plug, obviously, what the budget workshop's coming up, so and we'll be talking about those sorts of issues at the budget workshops.
Thank you, Peter. And I sort of had made those assumptions, but thank you for clarifying. And just finally, from me, going back to Councillor Gowland's point about the FCSO 7 central government policy, I think it was the point Matthew made earlier about things are going to get bad. So we included in there. But I think on that particular one, perhaps if there is an opportunity to outline a little bit more detail there, it would help members for future reports. Okay, any final comments on the Councillor Stockwood?
I think a lot of the red risks are things that are red risks every single time. And then we were told in the training, we can't terminate them, so we just got to tolerate it. So ultimately, that's where we are on a lot of what the red risk is. I think particularly, I think what I want to talk about is when it becomes a new thing and what becomes a strategic risk. One of the items outlined in the narrative of the internal auditor, there was some text after the three things back at the beginning of the agenda tonight, was around the cost of living crisis, and there's a potential risk around power supply over the next 3 months. So in terms of a smart target, I think there's a strategic risk to this within this organisation's sphere of influence regarding power, the impact of power cuts on our residents within the next 3 months. And I think that could have, although I don't think it's a financial risk to this organisation, I think it does impact our residents significantly. And I'd like to know, could I promote that as a strategic risk that the council could consider in some way? Or is this the wrong field? But I'm going to give it a go anyway. Thank you very much.
Charlotte, you're thinking about that one. I don't know if you want to make a comment, but...
No, Jem, I'm going to go away and continue thinking about it.
We'll take it back to the management team for a discussion.
Very prompt discussion, because it's really in the next 3 months that I'm worried about. Beyond then, I'm not. I think things will pick up, hopefully.
I think just on a general point, an observation, Charlotte, based on Councillor Stockwood's some of his comments there. Appendix C looks at the current rating. What might be useful, because he made the point about these are all red and they seem to always be red, is the movement. And the movement potentially, I think it's referred to as a residual rating. It may be worthwhile actually having that included here in terms of what actions we're taking or what mitigation is proposed, and therefore what's a residual risk.
It is now considered to be best practice to have your inherent, your starting point, then your mitigation controls, and then the other way around, your residual. So we're going to put both of them when we review the strategy next year. We'll make sure that for each of the risks for next year's monitoring, both are included, so that you can see how effective the controls and mitigations are.
I think the controversial element presented in the training was the idea of targets for risk, and whether we want target for everything to be one, or do we accept that the reality of some targets is that we're going to have to tolerate them?
Yes, I think as you said, Charlotte, we're reviewing the strategy in February, and some of these points can be revisited, I'm sure, then. But certainly in terms of movements, yes, the inherent starting point, if it can show the movement towards the residual, may help us understand a little bit better those proposed actions. Okay, if there are no final comments on Councillor Gowland. I'm just about to finish the risk, so perhaps if we try and keep that until.
I mean, earlier in the risk report.
Oh, I see. Sorry. In which case, carry on. Yes.
Yeah, thanks. Sorry, I wasn't sure if you were sticking with the end. I wanted to discuss the new risks that have been added. So I think that maybe in the light of the training, some of them are a bit vague. So, I mean, the obvious one was the carbon management plan. I would have thought it should be, I'm not going to say what it should be, I don't know, but more specific about specific things that could be smartly assessed. because the thing about that, I think, not just that one, quite a few of these here, is kind of, so what if we failed on that, you know, short of sea level rising, it's not really going to affect anybody. So I think it would be good to have a way that we could actually assess it more specifically, you know, failure to cut the target, reach the target's reduction. I also think some of them are written, I think it came back to one of the things Councillor Stockwood said earlier, they seem to be written in a slightly inverse language. So FC S31 says, oh no, so NS22, ensure homes for Ukraine scheme is of support in accordance with national guidance. I think it should say failure of homes to Ukraine scheme to be supported in accordance with national guidance. Some of them are written in the positive and some are written in the negative. I think it's only a minor thing, but it might be best tidied up.
I think what I'd like to say in response to that is that the training that you've had this evening,
You got earlier on.
we received at the beginning of September. This report was already written at that point because, of course, it was supposed to be coming through. So these are things that we have also picked up on that we can improve on as we go through the next couple of months.
Thank you.
So I just want to make one comment about, particularly about the carbon management plan objectives. I think the challenge with this is you can list as much as you want. The problem is it's because we know that the carbon management plan has got a load of targets that goes to that group, that scrutiny group, and it was reported back. That's the way we sort of report on it. So we're trying to it's about trying to capture the risk, but not having like a whole list of things, because otherwise you end up having just going to have pages and pages and pages. And you won't thank us for it, and certainly it isn't going to be very carbon friendly, is it? If we start printing off lots of paper.
I mean, I know I'm always going on about carbon, but it's not my only interest, and it does apply to some of the others. Maybe it would be better to stick with the overall one and then pick out one that's a particularly high risk. You know what I mean? That amongst all those lists of things to be done, you know, presumably there's employees and staff, and you know, but the one that's really a risk, pick that one out.
I think clearly the training has invigorated us all in terms of being innovative and wanting to make improvements and suggestions for change. So I'm sure, Charlotte, that's going to be coming. As you said, we've all sort of been exposed to that, and I know it's an ongoing process. It's a live process, you know, both our approach and what the outputs look like. So I look forward to receiving that. Well, we will look forward to receiving that at future meetings. But I'm just conscious of the time, unless there are any final comments on this particular agenda item, risk management. So the group is asked to note the contents of the report and consider any recommendations on the red alert risk, which we have duly done, and I'm sure Tracy has captured, as well as Charlotte, some of those comments. So if we're all content with that, we can move on to the next agenda item, which is item number 7, and that is the going concern assessment, which is on pages 87 to 92 of the report. And before I bring in Sarah, I think, who or is it Peter on this one? Sorry, yeah, you're the next one, Sarah, so you've got a bit of time. But this, I think, was newly initiated due to some of the COVID situation risks we had. I've had a detailed look through this. I'm sure Peter's going to take us through some of it, but it does look fairly positive in terms of the outlook. And I'm saying that also in the context of, I think, the statutory accounts and the financial status of the organisation, which the auditors also look at. So, Peter, I'll hand over to you in terms of anything you want to specifically raise. But just to remind members that the going concern is intended to be looking at not only our current financial position, but also the projected, and also the governance arrangements and the regulatory sort of environment that we operate within. And I think as Section 151 officer, you've gone through all of those, Peter, and this is a report. So I'll hand over to you in terms of any highlights you want to.
Yeah, well, as you rightly say, I suppose really my statutory role, it's giving a professional opinion, and I suppose going concern those of you that have had the misfortune to be involved in accounts in the past. I'm sure you might have heard of the going concern concept, which is one of the traditional concepts in terms of when you're looking at accounts, that when the auditors effectively sign off the accounts, is the business effectively going to be solvent, I suppose, going forward, and that's where it comes from. slightly, it's more, to be honest, it's more probably, it has more relevance in the private sector than necessarily the public sector, because, well, it used to. I will say the public sector, I'm sure you've all heard of Section 114 notices that have various councils have been issuing, and given some of the financial troubles they've had, and in a way that's almost the closest we get, I guess, to almost becoming insolvent as a local authority. So obviously this report gives you my if you like, my summary of in terms of where we're at with being a going concern. It gives some reliance as part of the audit for the statement of accounts, and the figures that I'm using, obviously they relate to the figures that are in the statement of accounts, and we have put in, I wasn't here for the debate last year on this report, but we have put in some comparatives just to give a bit of context in terms of where perhaps some of the numbers were in terms of the previous year. But as well as looking at the statement of accounts, we look at the current financial position. So we're looking at where we're at, for example, with our in-year budgeting. So referencing, for example, the Q1 finance report, which has been to Cabinet and Corporate Overview Group. So if I was to summarise, I'm not going to go through the report in any particular detail. The council retains healthy reserves. Historically and currently, it still achieves a budget efficiency position, and that's despite all the various current pressures that we face, and particularly obviously inflation, changes in interest rates, increases in pay awards, and those types of things that you would have picked up on either just reading or listening and hearing in the press, or if you read our Q1 cabinet report. That's not to say obviously the outlook is going to be challenging, and I was hoping that word austerity had been struck off out of the dictionary, but unfortunately it's come back to bite us, and it appears austerity 2 is on its way, and we'll wait the autumn statement to see what that brings on the 17th of November. Obviously, we've got a fully funded capital programme, and currently we don't have the need for external borrowing. There is, as I say, a lot of downside risk still at the moment, particularly inflation, as I mentioned, and not only just the inflation directly in terms of paying utilities, but there's all that knock-on effect on supplies and services. So all the people we're, if you like, contracting with, not strangely really, unsurprisingly, the prices are going up for things. So and that includes many areas of work and people that we contract with. What we do have, as I say, we do have a healthy level of reserves, and that enables the council to mitigate and manage risk, and gives us some flexibility going forward. But obviously we cannot rely on reserves. That's a key point. Reserves, once they're gone, it's like if you sell your family silver, once it's gone, it's gone. And it's the same with reserves. So, and not just forgetting as I mentioned, austerity. Obviously, we've had COVID as well. We're still coming out of that, and there's obviously the legacy impact of COVID. But given all of that, as I say, it is a positive report, and my overriding judgment and conclusion is that the council does remain a going concern, which I hope you're all pleased to hear.
Thank you very much, Peter. Any comments or questions for Peter on this summary? Okay, thank you, Peter. I have one just on the MTFS, just a very quick one. I know you've referenced it in paragraph 4.10. Clearly, with the recent sort of economic and political issues that are in the global sort of arena, the MTFS, there is going to be a knock-on effect with the increasing costs and so on, no doubt. You've mentioned sort of it will need to be amended. My question is just around how and when that will take place. Is that part of the normal budgetary cycle, or is that going to be an exceptional sort of process or approach to factoring in some of these recent events?
There's a combination of things. Obviously, there's the in-year impact, which we report through the quarterly reporting to Cabinet and Corporate Overview Group. So that's got, for example, pay rise, the anticipated pay rise. You've probably all seen the £1,925 that's been quoted as the offer for local authority employees. So we factor that in now into the current year budget and the impact of that. And then obviously, and I'll plug the budget workshop once again, that there will obviously be focusing on what the impact of that is going beyond the current year, and that's where the MTFS kicks in. So we're looking at the next 4 years as well.
Thank you. And again, my assumptions were there, but it's good to have the assurance in terms of the in-year reporting as well as the normal cycle. So I don't see any further hands up in terms of comments on that, but a very positive outlook, which is good to see, particularly in the current circumstances, as we've all been talking about this evening. And I think Sarah is going to take us through, if there are no further comments, on the next item with some more about the numbers. But for this particular one, we are asked to remind ourselves to note the positive outcome, which is what we have just done in terms of the assessment made by our Section 151 officer. So I'm sure Tracy's captured the discussion and debate, and we can move on to item number 8. And Sarah, it is yourself, almost last but not least, capital investment strategy for Q1 22-23.
Thank you, Chairman. So this report is actually a new report for this year. Came out of the new Code of Practice 2021 that's recommended quarterly reporting instead of your normal mid-year and end-of-year reports. It's somewhat of a work in progress. There's no sort of industry benchmark at this point, so it will sort of change, particularly on the next one, maybe narrowed and slimmed a little. But for this report, we've included the full detail. So from paragraphs 4.1 to 4.4, it just details, which you'll all be aware of anyway, the economic uncertainty that we have at the moment. So rising inflation was at 9.4 at the time of writing and forecast to increase to 12% at its peak. Interest rates currently at 2.5 and forecast to peak at 5% by the end of this financial year, so March 23. Our currently longer term investments are outperforming average interest rates, but our short term interest rates are currently fairly low in comparison. Paragraph 4.5 summarises our investment income at Q1. So we budgeted at 673,000, now projecting 1.2 million. So that just goes to show what the impact of the increase in interest rates has done for that particular part of the budget. Paragraph 4.7, our investment activities show at the point of writing again at Q1 an average interest rate of 1.51 compared to 0.95 at the same time last year. This is due mostly to balances being slightly higher, but also the interest rates starting to creep up as of Q1. And that will continue for the remainder of the year, given the forecast that we've got at the moment. The fact that we get lower interest rates on our short-term investments just reinforces our strategy to invest in those longer term where the interest rates are particularly high. Last year, in comparison, the spread of our investments was a little more sort of geared towards the cash liquidity sort of area, because we had an unknown uncertainty of paying out grants and things like that. But this year is slightly different, so that we have got a greater spread of where we're holding our cash. From paragraph 4.12 shows the capital value of our diversified funds. You might recall, I think it was the year of COVID, the investments dropped by 1.2 million, just over 1.2 million. That did recover, and since, because of the current economic crisis, has started to dip again. At the time of writing, it was 846k. It's now just over a million. So it's not again. It's very and it's due to this one and so 23. And to mitigate this, and it was included in the report, we have earmarked some of our efficiencies to mitigate the risk of this potential fluctuation in price. Paragraph 4.16 talks about the prudential indicators. It discusses the capital underspend at Q1 projected of 6 million, primarily on support for registered housing providers, Bingham Hub, and reprofiling of some leisure centre building works. The financing costs and net revenue stream is improved because we have higher investment returns and we don't consistently have any debt at this point. And the expected investment position is higher because of the underspend on capital programme and some additional Section 106 monies. So moving on to paragraph 4.17 in our commercial investments, there's a new indicator as per the new code, and it's percentage of commercial income. We do actually do something very similar to this anyway, and we have done for a number of years. We set ourselves a target of no more than 30% of total council income. Currently, our position's at 19%, and so this is well within the target that we've set for ourselves. So in conclusion, the economy is fraught with difficulty with interest rates rising. It will have a positive effect on that side of the budget, so we will see the benefit of increased income. But obviously the uncertainty will have a negative effect on the capital values of our investments. There's also changes in the code and threat of borrowing caps and limits on where we can borrow from, so we just need to bear that in mind. But we will continue to be vigilant and report on any significant issues that arise.
Thank you very much, Sarah, and actually perhaps the Chancellor might benefit from some of that insight as well. I think we were due to have an update today, wasn't it? Or was it yesterday? It was yesterday, wasn't it? Which is delayed now. But thank you for the insight into the capital investment strategy. Do we have any comments or questions from members? I'll throw it straight out onto the floor.
So, Mr. Chairman, this is just a new form of standard report, is it, that we have to do every time? What do you feel that we should be aiming to look for in this report? What are the key issues? Well, the three key issues, and how are we addressing them?
I think the purpose of this report is to give a more frequent insight into, because as you can clearly see, it fluctuates and it's very volatile. So I think the point of having more regular updates is so that you're aware of the position on a more regular basis. There isn't, as I say, as an industry standard or a template for what you to report on. So it's really the key indicators that are in there. So you're looking at really your cash investment position, any risks on increases in interest rates, and potentially your balances going forward that you've got invested, I would say.
Did you want to come back, Councillor Stockwood, or does that answer your question?
Well, I think there'll be the changes to the economy. Well, the economic picture is fraught with difficulty. It says in 5.1. I think tomorrow is it the Federal Bank sets its interest rates, and then the day after the Bank of England. And I think the autumn statement's been moved back 2 weeks so they can hope to get a forecast ready by then, because in the hopes that somehow it might be a little bit more favourable. But so the things that are being said in terms of tax and spending changes are perhaps preparation for what's coming out of the Fed tomorrow, I think, or the day after perhaps. But I do think it's more than just a recession this time, and we talked about it before. It's the stagflation issue. That you've got high inflation and a recession. I do think we are effectively, the risk of recession is what everybody says, but everybody's also forecasting a recession next year. And that you're looking at a position of these figures. I mean, I say it again, when I started at the council, it was 4% interest rates, but our return on investment was 7.5%, which was now you've got a situation whereby your inflation is higher than return on investments of all types. Both your assets are not returning, your year-on-year return from your assets isn't growing, and your cash assets, your investments don't seem to be generating. So it's almost like we're managing the declining value of what we've got. And that seems to be a different position to what I've seen before. And I think it's perhaps we need to talk more about stagflationary economy rather than just a recessionary economy, I think, in some of the reports going forward, and how we're in a bit of a different situation. And then I can talk about growth again. So I'd just like to bring that point in before I come to the end of the meeting.
Peter, yeah.
Yeah, good points, Councillor Stotwood. Good to see you on form tonight. Seriously, there's some treasury management, the usual treasury management training. We have got that planned for January, so we'll have the treasury advisors coming in, so they'll be focusing on a lot of the points you've just been talking about.
Thank you, Peter. And I think Councillor Stockwood's raised some interesting points there. And I think just going back to SIPFA, if you recall, we used to have these reports. Was it 6 monthly, Sarah? I think, wasn't it? So, the intention is quarterly, partly to allow us, more opportunity to have those sorts of discussions. But I mean, going back to this particular report, Sarah, clearly we've got high balances, high returns, and excessive investment income at the moment, and where I think commercial income, as you said, 19% in terms of the 30% threshold. So it's all very positive, but there are three particular areas I want to sort of just draw to your attention. In paragraph 4.10, the section 106, I think we've got 39.6 million held within the 77 in terms of investments, and there is a range suggested in there from 90,000 to 598,000 in terms of the potential interest. So I'd be interested to just have your view on that in terms of any potential impact. The second one was the diversified funds. Clearly it was 846k deficit, which I think you mentioned in your commentary is now 1 million. And based on the old figure of 846, it was 20% of cash balances, but 78% of our investment interest income. So again, where is that trend heading, and what sort of your proposed approach or views are on that? And then finally, I think with all the positive sort of, excessive interest income, high balances, etc., clearly our borrowing requirements are internal focus. But if it does go external, and I know we've got reserves for a rainy day, if it does go external, then the opposite effect of that is high interest rates in terms of our borrowing. So how is that being factored into our forward strategy? Sorry, there's quite a lot there, but hopefully I broke it down into bite-sized chunks.
Okay, so your first question, 4.10, the 39 million, section 106. So it's not really a range. The 90,000, I think it was the original budget for interest on section 106s. That was at a time where interest rates were very low. Section 106 balances were also lower. This is an updated position based on higher levels of section 106 income and also increases in interest rates forecast to the end of the year. So this is perhaps half of the year at 3% and the second half at 5%. So it does make that much of a difference. Okay. The second question on the diversified, the income from diversified funds that we have in, there are 3, perhaps 4, but 2 in the main that do return the highest rates of interest for us. Those rates do rise. They're already higher than the average and have been for quite some time, which is why our returns have always been quite good with interest. But they are rising, but probably not as high as fast and as steep, let's say, as the Bank of Interest rates and the cash rates, because they're rising in line with Bank of England. But we will see an increase in that, and we do keep monitoring on our income that we get from that. And at this point, it still is one of our or 2 of our best investments to have because the return is high.
Okay. Yeah.
And in terms of external borrowing, obviously at the last MTFS, we weren't projecting any need to borrow in 5 years. That position, as you quite rightly say, can change dependent upon expenditure and capital receipts and our reserves balances. Obviously, the higher interest rates would have a material impact on us, and that's why it's been added as a new risk in the risk register.
I had noted that earlier. Okay, thank you.
Just to add on the borrowing, well, the intention still is that we're not borrowing. No. Obviously, we're going to try and I would hope, let's all hope, that over the next couple of years, and it might be saying a year or two's time, we'd perhaps maybe looking at borrowing or a bit longer. But hopefully, when we get to that point, that the interest rates will normalise again and hopefully reduce anyway, so that the cost of borrowing should reduce.
Thank you, Peter. That was my questions. Thank you, sir. Any final points from anybody else before we note the contents of this report, or more specifically, we've been recommended to note the capital and investment strategy and the update position as at the 30th of June, although we are in November, and this meeting was originally scheduled for September, so there may well be other changes, and I'm sure the officers will notify us of any urgent or material sort of changes. And I did actually meet Peter yesterday, just to sort of clarify if there was anything in that.
Well, to add, you'll find out in a few weeks because we've got another meeting. So.
Thank you for reminding me, Peter. Yes, in 3 weeks we have another meeting, in fact. Yes, we'll have an update pretty soon. So, okay, if there are no comments, then I think I'm sure Tracy's already captured but we've noted the capital investment strategy and the updated position. Which brings us on to item number 9, the work programme, which is our final item. I'm sure you're all glad to know because we've had quite a long evening with our risk management training as well. But in terms of the work programme, I think it's for information, unless there are any specific points Sarah or Peter want to raise, or any of the members. But Sarah,
Yes.
Did you have your hand up?
Yes, thank you. I just wanted to point out that there is a potential risk. SIPFA at the moment are investigating some potential areas of audit in relation to infrastructure assets and how depreciation has been calculated within the 21-22 accounts. So before the auditors can sign them off, they're awaiting instruction from SIPFA. And I am told by our external auditors that it's a possibility that won't happen before the November 24th deadline, in which case the annual audit report and the statement of accounts won't be at that meeting and be moved to February, or perhaps an extra one.
Okay, well, thank you for letting us
Just to add, the plan was that we were going to do some statement of accounts training, and that was going to be prior to you seeing the statement of accounts. Clearly, if the accounts do get moved to, say, February, then the plan will be to have that training just before that particular meeting.
Thank you for reminding us, Peter. And we've got, I think Sarah mentioned the Treasury Management and training in January as well, I believe. January 17th, in fact, I think that was confirmed today. So, okay, that was the work programme. In which case, Councillor Stockwood.
Are you looking to raise an item regarding this independent member arrangements and the way forward within the next few meetings, or is that something you're now looking to schedule in the next financial year?
I think it's probably appropriate, maybe after we've got through the next election, that we'll do it with the group and revisit it then.
Yes,
and hopefully then government might have perhaps agreed what the approach is in terms of, because obviously there's still a bit of uncertainty as to the expectation is that whether they'll just do it and say, oh, it's best practice and you should be doing it, as opposed to a almost legislative requirement, which I think will be difficult to implement.
And my references earlier, Councillor Stockwood, in terms of that particular area, I think I had heard there were, some potential changes coming, which is why I asked our internal auditors, and I think it will come back to this group eventually. Whether it's in the November or earlier meetings, I doubt it. But I think the point I raised with officers was it gives us a little time to have a think and, perhaps just outline what our approach might be if we go down that route. So I suspect it will come back, but possibly, as Peter says, after May.
So there may be, we've had an evening this evening where we came in quite early and did some training, and then we've had the meeting afterwards. It's planned that either at the next meeting or the meeting after, we'll be doing the statement of accounts, and we'll be invited in again, possibly at an earlier evening, to want to go through the accounts first. And then there's also the Treasury Management training, which talked about January, and there's also a mention of The group were advised that page 11, it says the group were advised that internal auditors BDO were looking at delivering a joint Q&A session with Gedling District Council on external and internal audit issues. Is that still on the track? And I'd just like to say, we've come out this evening, even though we had something else that we were supposed to attend as Councillor Stockwards. But we came this evening because we were told it was essential training that we should attend, and that's in the member development group, and that you should attend that training if you're going to be on the committee. That January the 17th is another diary clash for us. And so as we are 40% of the people turning up to the training, I just like to think for all these extra training that we are doing and are showing our commitment to the committee and the work of the group, some of the dates that are being put forward, could we have some discussion around them as to whether or not available and the format of things? Because we do seem to be the most committed to training group, and I just like some, some discussion perhaps around the scheduling of things with all these training sessions that are coming up.
I hear what you're saying. I think that the challenge is, if we started working around everyone's diaries, we won't end up having any meetings probably. It's just we have to work. If I'm honest, we do it in a hierarchy. Certainly, we have to make sure Councillor Verdi and the finance portfolio holder, in terms of treasury, make sure they're in particular available. And then it's also a question of what other meetings are happening when. It's quite a difficult thing to programme in the training, and we're not going to go around checking everyone's diaries. And if you can't make it, that's unfortunate. I'm quite happy to give those councillors on this group who can't make that training, we can do a separate briefing if that would help.
In the sense that the member development group said certain things are essential, we do take our role as councillors seriously, and we deliberately come out to do these things. But if certain essential training could be videoed and shared with us afterwards, I really appreciate that opportunity to keep up to date with what's going on in that format. I'm sorry I can't attend every single in person, but we are fully committed to trying to participate in the training programme, and I think I welcome that opportunity. That video training.
That's a good suggestion. We'll look into the option of video in it. The challenge when you start saying we're going to video something is, and no one will attend, and we'll have no audience and a trainer on his own. So, but to be clear, we welcome your support for the training, certainly more than others, shall we say? We're, as I say, it's just difficult, very difficult. There's a lot of factors when we are looking at the training, as well as getting the trainer in and when he's available.
Okay,
So
Councillor,
just really quick.
Okay, I think there's obviously a number of different permutations or whatever, ways of doing these things, and I think noted in terms of commitment. I think Councillor Stockwood, as you say, from this particular group, we do have a lot of training, and it's nice to see we do generally turn up. But obviously there are sometimes clashes, and I think looking at alternative ways of potentially capturing and then sharing some of those sessions is a good suggestion. So I'm sure we'll be looking into that. But I think certainly noted in terms of the intensity of some of the training and also the commitment which we are all giving. So I would also like to thank everybody for doing that. But
just to add, hopefully it can be seen as more dry subjects, but hopefully finding the training, you find it interesting.
Well, dry for some, but Councillor Galvin, I think, got very wet at the last one coming in with the rain. So, okay, I think it is now 8:50, and I will, I think, draw the meeting to a close there. So thank you all for attending, your contributions, and I appreciate it's been a long one with the additional risk management training, but thank you very much. And have